Hello and welcome to another Smaulgld live stream. Today or tonight is Wednesday evening, the 30th of January 2019. And welcome Smaulgld mug stackers and game changers. Tonight's topic: Powell puts Fed balance sheet in play. I would say it was pretty big news coming out of the Fed. Not that they didn't raise rates, but the statement and then the press conference afterwards. We're going to give that a good overlook. First, we're going to take a look at the reaction in the markets was all due to the Fed. And we've got the gold, silver prices, the crypto prices pretty much remained unaffected, I would imagine, from the, and you'll see the numbers didn't change very much from the Fed statement. But our equity markets shot higher. U.S. dollar index dropped a little bit, but it was the gold and silver and the equity markets that made the biggest moves. And then we're going to talk about exactly what happened and what I think this means for the Fed going forward. Well, let's take first a look at the gold and silver prices. Now, gold had been trying to hold on to 1,300 for quite some time now, and it did manage to hold on to 1,300 and has held on to 1,300, and then it throttled higher when the news came out that the Fed was going to leave interest rates as is, and also some of the commentary. And here is the gold price, and you can see it. It shot up from about 13.10, 13.9. It had been drifting lower, and then boom, went all the way up to about 13.23, and then it drifted lower. But there was definitely an immediate reaction, and you see this a lot in the gold and silver trading. You just don't see it continuing to skyrocket. It just taps out and then it comes back down. But very good news is that it moved up to 13.23 and it closed at 13.19, and that's about where it is right now. Silver did a similar move, and silver managed to get above $16 and managed to hold the price after the close and is currently trading over $16 as well. You can see silver had drifted lower as well, was down to about 15.84, and then boom, all the way up to 16.08. Excuse me, did the similar move as gold, drifted back down to about 16.04, and right now it's 16.03. So silver managed to pull out a 1.4% gain, and gold managed to pull out a 0.68% gain. Now, the stock markets, before we do the gold-silver ratio, well, these are good days for gold and silver. They were better for the equity markets. Keep that in mind going forward. You would think that the Fed getting a little dovish, and we haven't really even discussed what happened, that would mean that people would pour into gold and silver more, perhaps, than they might into equities. But wrong goes star. The NASDAQ up 2.20% today, up to 7183, 154-point gain. At one point, the Dow was up over 500 points. It did manage to finish above 25,000, up 1.77%. And the S&P 500 grew 41 points, up 1.55% to 2681. Now the Dow, the S&P, NASDAQ, all of them, since the plunge protection team went into action at the end of last year, they're now up 15, 16, 17, 18%. Big time gains coming in the equity markets. And so now we're only off, 7, 8% from the all-time high. Question is, I asked this question in December, are we in a bear market? And most people seem to have thought that we were. I'm not sure technically if we even are anymore in a bear market. The stock price is rising again today, 2%. And as I mentioned, the silver and gold prices are up, 1.4% for silver and 0.68% for gold. Now, let's look at the gold-silver ratio. Today is exactly the kind of day, again, that you want to see. You want to see gold going up a little bit, silver going up a little bit more. And so the gold-silver ratio is coming down, still over 80, and it'll probably remain in the 70-80 range until gold actually breaks out. And I would say I would call a breakout, not that I'm a chartist, but a breakout I think we have to see past last year's high of about 1353. And that was basically also around the high of the Brexit in 2016. Got to get past 1380. Basically, I think if gold gets to 1400, then it might take off, and then you'll start to see silver move higher, letting the gold-silver ratio come down a tad more. What else happened in the gold and silver? By the way, we have our silver debate tomorrow night, so there will not be a live stream tomorrow. It's 7 o'clock on Kennedy Financial. The esteemed David Morgan, silver guru, will be debating me on silver as a monetary metal. So please check that out. I may, if I have it in me, come on after the show and do a little recap if anyone's interested in that. Let me know. I may be tired of talking at that point, but maybe we do that. A couple other things. This is a point I make about silver. And people get very excited about all these uses for silver, and I said, well, there's a lot of uses for copper, obviously. You get water and pipes in copper. You use copper in electrical wiring and so on. Nickel's very valuable too. Used in electric cars. They expect a 15-fold increase in the next decade. And that's something probably won't come up tomorrow night, but one of my views, and I mentioned this to James Henry Anderson or Silver Doctors in the interview I did with him, both interviews, one he interviewed me, I interviewed him, was that one of the cuts on silver is my cut that it's not so much a monetary metal, but the flip side to that is that it's an industrial metal, and I don't necessarily view that as a bad thing. Look at palladium. Palladium's not monetary. It didn't stop it from going higher. You can get a commodity rally. I mean, silver can go higher as per Bloomberg yesterday, saying silver shortage. Of course, I think people are confusing money as value, and the only value anything can have is if it's money, period. No, I don't think so. I think silver could rise on the basis of it's industrial. Just because it's a commodity and it's not money doesn't mean that it isn't valuable. But I won't get into that. My point is, you can say a lot of things about what they say about silver and how useful it is. You can say the same about copper and nickel in a good way. And again, if you're saying how useful silver is, you're actually negating the fact that it's money. You're saying it's got all these other uses and people would rather use it, do use it, for industry. And nickel, and by the way, nickel and copper are money, period. In fact, currently, you have a nickel in your pocket that is made of copper, 75%, and 25% nickel. So copper and nickel are money, period. That is why I am buying copper and nickel, because copper and nickel are money. I saw it on a show. All right. But just keep in mind, nickel and copper also are valuable and can be valuable. Now, the difference is, I'm not trying to be as flip as I can, but silver is, quote, a precious metal, but it does trade 85 times less than gold, close to 100 times less than palladium, multiples to platinum, like 200 times less than rhodium. It's closer in value to a base metal like nickel or copper. That doesn't mean it's not valuable. It's just, it's not necessarily money. Now, Turd Ferguson raised this point. Very good point. Holy smokes, he says. Completely missed this news last month. It was in December 2018. Beginning in January of next year. That's 2020, though. Every new home built in California must have solar panels on the roof. Another demand spike for silver. Again, here is a case, and I haven't run the numbers, and I think a lot of people, they'd never do. They just say, silver is useful. You can use it in yoga pants. And therefore, there's going to be great demand for silver because they are finding uses for it every day. I don't buy that. You have to determine how much silver is going to be consumed in these new uses. Solar panels, we know how much silver is used in a solar panel. What I have to do, and I haven't done it yet, is calculate or estimate the number of new homes that are built in California in a given year, and then figure out how many solar panels will be used per house and how much silver per solar panel, I can get you an estimate on how much silver that is. Now, currently, the solar panel demand for silver is about 80, 90 million ounces a year. So it's less than, it's about 10% of the overall demand. Now, I don't know. I haven't even done a back of the envelope on this. Will this add 10 million ounces, 20 million ounces in demand, 50 million? I don't know. But just to say that it's going to be demand and it's off to the races, I'm not sure. Could be. But remember, with solar panels, what they've been doing the last 10, 15 years is a process called thrifting, where they use less and less silver per solar panel, and they may even start using nanoparticles so they could switch all together. So news like this doesn't get me all excited. However, I do hold out the possibility for much more for silver than gold, that as a commodity there can be a commodity crunch. Another thing I like to mention is that when the price of gold goes higher and you want gold, you don't have to have it. In fact, maybe you can't afford it. So the demand goes down when the price goes higher. Now, if you are a manufacturer who needs silver, platinum, palladium, nickel, copper, whatever it is, your demand for it and your want for it and your need for it in industry actually drives the demand for it and the price higher. And you will pay the price. You're not going to say, it's too expensive, I'm just not going to make solar panels. Nah, it's too much money, I'm just going to stop production. That's not going to happen in the same way. Gold is a discretionary purchase, either for investment, if you're an Indian or Chinese or American, wherever you are, and you want gold for your protection, your insurance, whatever it is. If the price goes too high, you're either going to buy less of what you would have bought, or you might not buy it at all. Jewelry, even more so, a discretionary item. People will hold off. Indians definitely do this. When the price of gold rises, they say, okay, I'll just wait for it to come back down again. There's no need. You don't have, unless there's a wedding, in which case it's hard to put off, but then you just buy less. The rupee goes down, gold price goes up, they buy less. But in a commodity, the demand is inelastic, meaning that it doesn't go based on the price and people say, well, I won't buy it because it's expensive. Companies don't have that luxury. So there's a possibility that silver, unlike gold, can have a commodity spike. But most people are fixated on gold and silver as money, period. And the only way that they're going to go higher is because there's going to be some type of monetary collapse and people are going to rush to the metals. That's one possibility. But remember, the premium for monetary metal is much higher on gold than it is silver. I think it's far better to look or put your hopes on silver having a commodity rush or a wealth effect, a lot of Indians buying silver jewelry, than counting on some type of collapse and then people rushing in to buy silver, because fewer people think of silver as money. Far fewer think of silver as money than they do gold today. And it's a historic relic almost in terms of people thinking of transacting in silver, because most people, unless they're 60, 65 years or older, they never did it. It's fantasy land. I think people are going to be trading coins for... People don't even trade the clad coins today. And in fact, we know this, even when they traded clad coins and silver coins side by side, people took out the silver coins and stopped using them. Why? Because they wanted to hoard them, because they were too valuable to be trading like the... you're better off using the cheap coins, the copper nickel coins. All right, but it's important that he's raising a point here, which is important. I think what we need to do is look at the numbers and see what type of demand that will actually add, and then figure out whether it's significant in the overall scheme of the supply-demand. But it does highlight that if there is some type of new demand for silver, and I don't mean yoga pants, but something that's going to increase demand or take up 10 extra %, it's going to eat out of the existing 100% pie. It's got to come from somewhere. It's going to put a strain on the supply-demand. You might get a burst in the price of silver, and it's not like if there's a burst in the price of gold, sometimes higher prices correct themselves. People stop buying and the demand goes down. All right, let's move on over to the cryptocurrencies. And they went up a little bit today. Bitcoin currently at $34.38, up 1.54%. Bcash at $116, up almost 8.5%. Litecoin at 31.61, up 3.5%. Looks like they're rallying at the moment. Ethereum $108, up 4.26%. And Ethereum Classic just under $4, up 1.18%. Now, I want to raise one more point. I'm not going to spend much time on cryptos tonight. But back in 2014 in April, now I've been covering Bitcoin since 2012, 2013. And people were always trying to get me to buy it, trying to send it to me, trying to get me at the time to download the blockchain. Or I just had no interest in it. I thought it was ridiculous. And all of a sudden the price went from like $70, $80 to $1,000. And I said, that's crazy. And I thought it was going to be made illegal. And I just thought it was ridiculous across the board. And after the price collapsed, I thought, okay, well, people finally come to their senses in early 2014. They realized, well, what's the point of this cryptocurrency? And there was talk of a Bitcoin ATM, and I thought, well, that is the stupidest thing I ever heard of. I mean, who wants a Bitcoin? Who's going to go to put, quote, money into a machine and get a Bitcoin? I just didn't get it. I didn't think it made any sense. And I found an old tweet of mine when I was looking for an update on the Bitcoin ATMs. Back in, I think it was April of 2014, I saw a story in CNET, and they were talking about how the only Bitcoin machine, it was brand new at the time, had been pulled from the store. And I thought, yeah, because who wants a Bitcoin machine in their store? Especially when the price collapsed from $1,000 down to wherever it went. And it's a Bitcoin ATM yanked after a brief debut. And that was 2014, and I thought, yeah, that's it. We're done. It's over. I mean, who's going to be paying attention to this? Well, one of the things that I've mentioned, my at-the-time opinion was based on my at-the-time knowledge of what was going on. And it was also clouded by my dislike of Bitcoin. But one thing you have to do as an analyst is try to put your own opinion aside. If something is happening, okay, so for example, if I'm still listening to CDs and LPs, that doesn't mean, and I think they're better than streaming, that doesn't mean that the rest of the world isn't streaming their music. I can trash streaming music, I can be against streaming music, but as an analyst, I have to pay attention that people are streaming music and that they're not buying LPs to the same level. They're not buying CDs to the same amount. They're not buying cassette tapes, even if that's what I do. So, same with Bitcoin. I disliked Bitcoin, and it collapsed, and I thought, just like Nouriel Roubini, see, I'm right, because the price went down. Now, the reason when I think of someone like Nouriel Roubini is he's saying he's justified for trashing Bitcoin, and the price going down to 3,500, 3,600 proves he was right. He's been trashing Bitcoin since 2011 and 2012. I don't understand that. I mean, he trashed it when it was $80. He trashed it when it was $400. He's not right now. I mean, that's why you have to dissociate from price. Price is not necessarily the sum total. It is at the time above. It doesn't necessarily contain the seeds of what it might become, either positive or negative. I mean, sometimes, in the terms of negatives, pets.com was once trading at $100 or so, but within it had the seeds that it was going to be worthless, and Amazon was once trading at $4 or $5, and within it had the seeds of going up to wherever it went. But this Bitcoin price collapse convinced me of my own personal dislike of Bitcoin. Now, I don't necessarily like Bitcoin now any more than my initial reaction is the same. It's just a bunch of numbers. However, I have to dissociate my opinion from what is actually happening and to acknowledge the capital flows into the space, the amount of work that goes into people working on Bitcoin projects, which I originally thought they were just spinning their wheels. But now there's big money in it. And just as an example, and we're not going to get into the whole crypto space, but Bitcoin ATMs, pretty much a dumb idea in 2014. They came out with it and they had to pull it from the store. Well, now there's 4,261 of them. That's up from like 2,000 a year ago. And 2,569 in the United States. They're adding like 5 or 6 a day. And a good number of them also dispense Litecoin, which no one even had heard of in 2012. I think it had just been launched. All right, let's move on from the cryptocurrencies and to the news of the day. Most of it all ties into our Jerome Powell discussion and the Fed discussion. So Venezuela is in the news. Bolton tells bankers not to deal with gold and oil from Maduro. It's interesting. I don't know how you would know, but that's the idea of money laundering. Donald J. says, don't go to Venezuela. So all of you people who think you'd be rich, king of the hill because you have silver and you can navigate a collapse in Venezuela, well, you can't go now. Because Donald Trump says don't go. Massive protest expected. Guaido, who is the supposed recognized president by a number of nations, including the United States and Canada, over Maduro. He's being targeted by the Venezuelan Supreme Court. Americans should not travel to Venezuela until further notice. And gold again. Venezuela, 20 tons of gold bar shipped out of Venezuela on Boeing 777. I don't know how they know this. I don't know how they know where it's going. But you can imagine they can't get their gold out of the Bank of England. And they're worried that the gold in Venezuela might be confiscated. So they're probably sending it somewhere. But Maduro's pretty much, he may hang on. Economically, the country's already toast. So it's not like this is going to destroy them further. I mean, if no one's dealing with them. The problem now is however they were being held afloat by accepting game-changing Chinese yuan for their oil. It's going to be harder now, and Russia's making noises about protecting their interests. And China, we haven't heard from, but China is in the news because there's been a big push against China from the Trump administration. Now they're looking to arrest more Chinese for stealing trade secrets. We got the Huawei company executive. There's charges against them that were brought the other day. So the U.S. is no longer buddy-buddy with China. And China's, we'll see how all that goes. All right, what else do we got here? See, when these stories are relevant because Powell mentions in his speech, or his, I guess it was a speech, his comments after the Fed meeting and Fed minutes were released, not minutes, it's just a statement, that Brexit was one of the things they were concerned about, as was China and the government shutdown. But here you go, typical fear-mongering. This almost made it to Moronica, but I've got another Moronica for you tonight. Kentucky Fried Chickens warns it could run out of food in a no-deal Brexit. So now they're trying to avoid at all costs the clock just running out and there being no deal as part of Britain leaving, I was going to say Britain leaving the UK, but the United Kingdom leaving Europe. And then other companies are also piling on. They could run short of fresh foods. Now, any shortage, first of all, can either be anticipated or alleviated. It's not like permanently there'll be no way to get chicken into England. There's no way they'll be able to grow, to raise chickens. The whole thing is ridiculous, but they're at the end of the game here. The problem is, from what I understand, I haven't been following it that closely. They want to negotiate a new deal, but the EU is saying, no, we already gave you the deal, and that's your deal, so they don't really know what to do, and the clock may just run out. But I'm going to have to take a further look about what's going on there. All right, now it's time for Moronica. Remember the other night I did a I did that chart a lot of people really loved and some people didn't like, which showed the well, maybe I'll show it to you. Let's bring it up. It showed reasons why gold and silver were set to skyrocket, and it showed it left out something. It left out a very important, one of the biggest hype stories that we've had in the last 10 years. And here it is. Here's the let me give you the chart. Stunning chart that screams buy gold and silver. We had JP Morgan is buying silver eagles, and they are stacking silver, and that is why I am buying silver. Nope, no evidence of that whatsoever. COMEX default, we must have heard 10 warnings on that. It was imminent. Dollar collapse, that's been happening for decades. QE4, negative interest rates coming while rates are rising. We're hearing that. Or they could never raise interest rates. Next move is negative. Gold silver ratio unsustainable. You know, when it was 50 to 1, when it was 60 to 1, when it was 70 to 1, when it was 80 to 1, it was always meant silver was set to skyrocket. Silver shortage, actually Bloomberg used that one just yesterday. There was all these new companies that were coming online, physically settle this or that. Then there was sovereign size gold buy coming. Gold back yuan. That was my favorite game changer. Petro yuan. Then the commercials went long silver. First time in 700 years. And that was an indicator that silver was set to skyrocket. But I left out. I left out one. We got a moron here.
Presenting the distinguished international news commentator and foreign correspondent,
Smaulgld. This has been an extraordinary week in world affairs.
No, I told Hillary Clinton that that's moronic.
What I left out was Shemitah. Shemitah was the big deal. Shemitah was the thing that was gonna change the world, and you had to be prepared. And I saw video after video about Shemitah, and it was all scientifically or biblically proven it was going to collapse, and you had to be ready. And I found this one here, Dollar Vigilante, actually had a page for just $44. You were going to get this package and all these testimonials from supposedly famous people, where you were going to be able to learn how to protect yourself against what was coming. And there it is, survive Shemitah for just $44. People believe this stuff. All right, Shemitah. Send me $44. That's what I want you all to do right now. Just send me $44, and I'll tell you what game changers are on the way. All right, let's now move on to, what are we moving on to? Jerome Powell. As we mentioned, this was a big day. This was, we'll see what happens tomorrow, if there's any follow-through in the equities markets, if there's any follow-through in the gold and silver markets. But they reacted as if it was a big deal. The announcement came out at 2 o'clock that they were not going to raise the interest rates. And they also said at the time, I'll give you the announcement here. They also said at the time that they're going to be patient as they determine what future adjustments to the target range of federal funds rates may be appropriate to support their outcomes, which is their dual mandate of fostering maximum employment and price stability. And so they decided to keep the target range of the Fed funds rate at 2.25 to 2.5%. Now, prices rose. I don't know why this was widely anticipated, but I guess they needed confirmation, because remember, the Fed's been talking about for the last 6 weeks that, yeah, we kind of should be patient. We should take a look and wait and see kind of approach. We should be data dependent, all the normal stuff that they always say. I guess it was confirmation, made people breathe a sigh of relief. Maybe they thought Powell was going to go rogue and maybe defy the president on the basis that the Fed is independent and they have decided they're going to normalize interest rates and the balance sheet and all that kind of stuff. And I think they've finally done as much as they think they can do, especially given that the economy is not rip-roaring. They might have gotten away with a bit more, but I have to give them credit for actually being able to end QE. And I said they would, and I said they would raise interest rates. No one thought they would ever raise interest rates, and then when they raise them, well, they'll never raise them again. Now they're one and done. They're gonna go negative. We heard that for 2 or 3 years. As they're raising them, the people that kept insisting the Fed couldn't end QE, couldn't raise interest rates, were insisting that they were right. Like, how can you be right? You said they couldn't end QE, then you said they couldn't raise interest rates, and then every time they did, they said, wow, they didn't raise them as much as I don't know. You're wrong. But anyway, they have managed to raise them, as we mentioned, to 2.25%, 2.5%, which is a pretty big deal given that they were at zero for the longest time, and they printed $4 trillion. But they're realizing that if they were to continue with their normalization, not only would Trump be pissed and probably fire Jerome Powell, I don't think so, but that the economy would slow down. And the Fed, all politicians, the Fed, the Congress, they're all very short-term motivated. Because if you really wanted to fix the economy, when I say the economy, I mean the overall financial structure. You have to get the debt under control. You can't have all this credit creation. I think they realize they're past the point. There's nothing they can do. They're not going to come up with $150 trillion to fix anything. They're not going to balance the budget. They're not going to find $22 trillion, no matter what Dizzy Miss Lizzie says about tax and wealth. And so I think they're realizing is they're just playing the game, what's in front of their face, and they realize, well, at least we have to make sure that the economy, quote, works, and asset prices stay high, and that's about as much as we can do. And so 2.25%, 2.5%, nice try. We managed to unwind the balance sheet just a little bit, but at least that's better than ECB, whose balance sheet is now like $5.6 trillion. China, you could forget about. China is like so much debt. Japan, same thing, negative interest rates. ECB, zero interest rates. So the United States, at least, the Fed can say they have less on their balance sheet. They have some interest rate, and that's about, it's, as many people say, it's the best looking horse in the glue factory, cleanest shirt in a dirty laundry pile. There's all these silly analogies, but basically it is it's a mess globally, and that's why I don't understand when people focus so intently. I guess it's because all they know, and they just hear these channels bashing the U.S. and bashing the dollar, which, yeah, it deserves to be bashed, but you have to realize this is a global debt Ponzi scheme. It's not relegated just to the United States, and in fact, to the U.S., the Fed's credit, not that they deserve credit, they're all doing it, but they've actually raised interest rates. They're not at zero, and they're not. Now, the Congress is still blowing money left and right, but, I mean, there's not a country in the world, I'd say, other than Russia, that isn't just blowing money, just creating credit to keep their economies going, because that's what's happening here. And what the Fed is doing, actually, and the entire government is doing, is Trump and just pushing stocks, irrespective of valuations. We're not really creating a roaring economy that would justify the stock market going up threefold in 10 years. The economy is growing at, 2-3% by the way they measure it. It's not a rip-roaring thing, but it's better growth than the way they measure it in Japan and in the European Union. So anyway, Powell did nothing to take the fire away from that was under the stock market after the statement came out, because his points were that, look, you got Brexit out there, you got Chinese problems with trade, and you got a government shutdown. These are all things that, while the economy is still solid and robust, I love to use those words, we're looking at tightening of financial conditions in December, and there's a bit of a slowing, we think, in the economy globally. Consumer sentiment, we're getting some reading on that, might be a little bit down. There's still strong macro, but there's, quote, cross currents. Okay, so when you see all that, what do you do as a prudent Fed chairperson, chairman, chairwoman? You patiently await clarity, and that is music to stock jockeys' ears, and it's also music to gold bug, silver bugs' ears, because it means they're not going to raise interest rates, and that means real interest rates are going to be favorable for gold and silver. And he kept throughout I'm not going to repeat everything he said, but the general tenor, whenever he could, whenever question he was asked, everything came back to wait and see for any change in Fed policy. Now, what's interesting, change in Fed policy, the Fed policy had been, we're raising rates. We're raising rates, and we're going to normalize rates, and up until a few months ago, 2019, there was going to be a series of rate hikes baked into the cake in 2019. It seems now they have told the markets, unless things get rip-roaring in the economy, we're on no set path to do that. And he did mention there hasn't been a major shift in economic outlook in the labor market or inflation, which they're trying to get to 2%. But he mentioned that the overall outlook is, quote, less favorable due to cross currents. That was another theme, the cross currents. Like to say solid, robust cross currents. Headwinds are another one. All these nautical references that they have. But he did say that one of the reasons to hold off on rate increases was that inflation has been muted. Oil prices have been dropping, so your headline inflation is going to be down. And he thinks that that's a reason that can justify not just waiting and seeing, but not doing anything. What else did he say? And he mentioned that they're going to have to evaluate, their balance sheet and the rolling off of it and the decreasing of it. And, they'll look at that in other meetings. And then someone asked him if this indicated that he had said previously, or the Fed had stated, that monetary accommodation was no longer required, meaning that's why we're raising rates. And it was a very astute question is, well, if you're not going to raise rates, seemingly, because you're going to wait and see, are you, in a sense, now being accommodative, meaning you're being loose? You're not tightening anymore. And he's trying to infer from a neutral that he's not doing anything, that the Fed's not doing anything, that somehow is accommodative, meaning they're heading back the other direction. And Powell was careful not to say yes. He said, we think we're at neutral, and that is appropriate. And he mentioned, again, patience and wait and see, and however, risks are skewed to the downside. Someone asked him if the next move on interest rates would be up or down. A very, very key question, because if you're waiting and seeing, generally it's because, if you're heading from 125th Street down to 42nd Street, when you get to 86th Street and you're at a stoplight, you're waiting for the stoplight to turn green, and then you'll continue on your path to 42nd Street. Well, not if maybe you're not going to go to 42nd Street. Maybe you're going to head back to Harlem. And that was an interesting question, because he didn't say whether they would go back negative, they would cut rates or increase rates while they were waiting or seeing. He basically said it was data dependent. He didn't just say, yeah, we'll just wait for this cloud to dissipate. We'll wait for the light to turn green, then we'll start raising. We'll continue on our rate path. It seems that they have abandoned the rate path hike. They're waiting and seeing, but waiting and seeing, you can infer from what he's saying, is because of the cross currents that may be with us for a while, he said, that the next move may be down. And he said, in order to raise rates, now this is all conditional, which was before it was preset or pretty much a given that they were going to raise rates. He said, in order, he didn't say what he would need to do to lower rates. He said in order to raise rates, we would need to see future inflation to raise interest rates. Now that's interesting because he earlier said we don't see a need to raise interest rates now because inflation appears to be under control. And then another guy asked him a question about, is this a pause in the tightening cycle? Meaning you're at the stop sign. Are you going to turn around and go home? Or are you going to go forward? And even called it the Powell put. In other words, you stopped raising rates because the stock market sort of fell off the table. So is this the Powell put? And he came out with the patience again. Got to be patient. It's all dependent on the data. But remember, being dependent on the data means he can go the other way. And unless he sees inflation, one of the things, he's not looking to go forward. He may see something that make him cut rates. I think someone else asked him, well, wait a minute. What's happened in the last 6 weeks? It's really been a little longer than that. That you're now on this mantra, you didn't say other than Trump yelling at you, that you're not on this, we got to normalize interest rates and we have to roll off our balance sheet. He went on about the narrative of the slowing global growth again in China and Europe. Financial conditions were beginning to tighten last quarter. They continue to tighten. So I wouldn't say he's done a 180, but he's definitely changed his tune. And the Fed has changed their tune that they may have done enough already and they may start going the other direction. And then he gives you the whole how the Fed operates. We react when we see sustained changes in financial conditions. And then someone asked him flat out, okay, are you caving to the president? And Powell said, oh, no. We always going to do what's right for the economy and the American people. And we have no political considerations. Okay. But the best part of all came when someone said, well, what happens when there is another recession? Of course, the first thing he's going to say is, well, the recession, there's no reason to think there's going to be a recession. Obviously, there's just theoretical and, as if recessions don't happen. And after 9 years of, quote, expansion, that somehow a recession is like a remote possibility. But they have to say that. They can't act as if they're preparing for a recession, because if they did, then the way the economy is all sentiment driven rather than fundamentally driven, then you'd have a recession. So, answer he gave is very interesting. The guy asked him, you only up to like 2.25%, 2.5%, and if there's a recession and you wanted to use interest rates to combat the recession, you don't have that much room. And this is where I think this was a big deal, where Powell said, well, we'll use the full range of our tools, and we could use interest rates and bring them down, down to zero. He didn't say, and then continue to go into negative. I don't think they would do that. But some people, I think Zero Heads, thought that they might go negative. I didn't infer that from what he was saying. What I inferred from what he was saying was that they would use the full range of tools, including lowering interest rates. Of course, this is all hypothetical because there's not going to be a recession. Forward guidance, which means yakking and trying to convince people that they're accommodative and they're going to do what it takes, so to speak, in Mario Draghi terms. And then he said, including balance sheet, which means they would be open to buying, it sounds like, increasing the balance sheet, doing another round of QE. And he says there is room to do, quote, substantially more. Okay. So if you can't get it through interest rates lowering, because you can only go from 2.5 to 0, well, you can always do another round of remember, QE is now part of their toolbox. So when he talks about the full range of our tools, well, that's definitely on the table. And they kept asking him, did Trump have anything to do with this? And he said, no, we do the right thing for the economy and the American people. And we think that being patient is really the way to go. We just need to wait. And got all those cross currents out there. So that's what happened today. And if that's going to be the Fed's view, I would imagine you're not going to see economic data that's going to scream, uh-oh, we got to raise rates. You're going to see economic data that probably indicate that the economy is, not too hot, not too cold. And I don't think, even if you did see for a month a little whiff of inflation or something that looked, they would call that noisy, and I don't think they would change from their point of view. You'd have to see between now and the summer a real turnaround, looking like the economy is just starting to take off, which I don't expect, but you never know. I think with all the things going on, it's probably not going to happen. Now, we did have some earnings today, but it doesn't look like the futures right now are going one direction or the other. They're pretty much flat. So I think the markets are going to digest and then wait till tomorrow to see where they go. The gold market right now, yeah, they're neither of the gold or silver are moving much. A little down a little bit. Gold down $1.25. Silver down 4 cents. Dollar index pretty much flat. All right, well, let's see what you guys think about today and whether there's going to be some follow through in the equity prices and the gold and silver prices. Remember, it won't be here tomorrow. We'll be on the Kennedy Financial debating David Morgan. But let's see what else we got here. I'm going to put up this and get to your comments. All right. What do we got? Here's the Fed. We got Ann, we got Lance. I should have told you, if you want your comment highlighted and you want me to comment on it, put the 3 asterisks and the Smaulgld, and I'll see it. Buy only gold. By the way, if you're interested in buying gold or silver, you can do so through the Smaulgld site. I have affiliate links there. It's not investment advice, but you pay no more, no less, and you do help the site out if you're going to buy gold or silver. If you buy it through the links there from SD Bullion, Money Metals Exchange, Golden Eagle Coin, lots of products you can find there. And yeah, if you buy from there, Smaulgld gets a small commission. Just like if you buy anything from the links on the Smaulgld site or below this YouTube or BitChute. I do have the links below. You can join Coinbase, buy $100 worth of cryptocurrencies. You get 10 free. I get $10 as well as part of that deal. Yeah, you can shop at the Smaulgld store. That's the Zazzle. Or you can buy your Smaulgld your mug directly, not your Doug directly. Your mug directly from Smaulgld. And I'll ship it out tomorrow. I'm shipping out some mugs tomorrow, so if you want your Smaulgld mug, comes 2-day priority mail. That's the classic and super classic. The one you see on your screen. The one to the left is the super classic. That's $23.99 with shipping. Shipping in the continental U.S. generally costs between $7.75 and $9. So this, because you're paying for the shipping, the cost of the mug is about the cost of the mug. And then the other one is $19.99. Both game-changing mugs. You can stack them. A lot of people now have both mugs. But then there's also mugs that you can get from the Smaulgld store that are really cool. There's a couple of beer steins. I have all these mugs. They're really cool. And the beer steins are 22 ounce and I think, yeah, 16 ounce for the other one. And I'll show you those. I got mug shots of those guys. And then there's a pet bowl. There is a shot glass. Pets like Smaulgld mugs. I mean, they are classic game changers. Let's show you the mug shots of all the different mugs that are available. And they make great gifts. And here we are. Smaulgld mug shots. Here's that classic 22 ounce beer stein. It looks small. I mean, you can't tell from there. It's only 5 foot 8 inches. But when I got it out of the box, this is a ripoff. It actually fills 22 ounces. about 2 full beers in there. Yes, indeed. And they're all the links are below. They're at or you can go to the Smaulgld site and find them. There's an espresso mug. Look at that. It's tiny. Packs a punch for your espresso in there. There is the frosted Smaulgld mug, which is really cool. That's that one. Get your frosted Smaulgld mug. And there is a Smaulgld travel mug. A very popular seller. I think it's the second most popular seller to the beer stein, I believe. Remember, this classic and super classic mugs I ship out. You order those from the Smaulgld website. And there is a pet bowl for your dog. Very nice. Smaulgld pet bowl. They have to drink their beverages too. And then there's the Smaulgld mug shots we've seen, but then there's the Smaulgld mug shot glass. There you go. That is a mug shot of a shot glass. And that's very nice. You can stack those, keep those at your bar or wherever you keep stuff like that. Also at the Smaulgld store, there are bottle openers that you can, they're magnetic. You can put them on your refrigerator. A whole bunch of stuff. Pens, all Smaulgld products, branded products for all you game changers. And remember, always lead the mug life because mugs are cute. All right, what else have we got here? Okay, Ann Holloman. I wonder if it will shoot up after that. All these years in a bear market must have eliminated resistance. Yeah, I think that's a very good point. That I was thinking today, forget reasons for gold or silver to rise, just that they haven't. I mean, investors just buy whatever eventually they want an asset that's going to go higher. And if they think they've ridden stocks for 7 years, 8 years, maybe they just turn. People look at palladium, they say, oh, look, that one up. You see a Bloomberg story like silver shortage. Why not? $16. Who knows why these things go up or down? Bring it on, says Ann. Exactly. Mike Hermes. Wow. Copper, nickel, silver, and gold are not money, but paper is money. I would call that paper currency, not money. I have no idea what you're talking about. Copper, nickel, silver, and gold. First of all, copper and nickel are currently used as a medium of exchange. Therefore, you could call them money. Silver is not used as a medium of exchange. It's not. Gold is money, period. We'll talk about that tomorrow night. I think what's happened in the gold and silver communities, many of you have been fed one side of a story constantly. I was talking to somebody who knows nothing about this. Everything said, yo, so what is it that doesn't make sense? I said, it's because when you talk to somebody who's indoctrinated in the gold or silver story and watches 15 or 20 videos a day about gold is money, period, and silver is money and all that kind of stuff, they're not able to see that they're not. And we'll talk about, I hope that I'm able to have a reasoned discussion with David tomorrow. Not that he's unreasonable. It's just that I don't know how the questioning is going to go and whether we can bring it up. If not, if it's somehow the conversation doesn't actually answer all those questions, we'll do another live stream on it. But people have this idea. People get mad. Lewis thinks that gold is not money. What's wrong with him? He doesn't understand. And they go, and the same people who insist that there's no gold at Fort Knox because they've seen it on a YouTube, thousands of YouTube videos. You just become convinced of something and you're not willing to even listen to anything other than gold is money, period. JP Morgan said it. All right. What else have we got here? Yeah, Scott, who would drink 2 full beers? I guess you don't need that Smaulgld mug. Lucky is made. You guys are asking for Lucky, it sounds like. Lucky. Last time I went looking for Lucky, I couldn't find him. But I think I'm going to be able to find him today. Lucky is a Doberman pitcher. Here's one. But he might not be on... Oh, he might be on his head here. Yeah. But he's kind of cool looking here. It's avant-garde. There's Lucky with his snout heading in one direction. But there's another picture of Lucky guarding his mug. But anyway. I think we've had a good time tonight. And it's probably time to call it an evening. And we'll see you tomorrow. Tomorrow night, we're going to have the great debate. Silver is money, period. I'm not going to give away what I'm going to talk about, so you have to tune in tomorrow night. And let's see what else we heard. And that's it. Trace is saying negative interest rates. I don't think so. Reserve currency can't have those. They have to offer interest rates in order for people to buy the debt. Well, we could talk about that as well. Trace, good to see you back here again. Miser is here. Got everybody here. All right, everyone. Thank you very much indeed. Unless I have any more questions or comments, I'm going to sign off in 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Good night. Good night, game changers, mug stackers.